Hi, I'm Ed Fulbright, CPA, CGMA, PFS of Fulbright Financial Consulting, PA. We would like to welcome you to our educational briefing.
Amid scandalous headlines about the president, a military strike against Syrian chemical weapons compounds, and a growing risk of a U.S.-China trade war, the torrent of major breaking news makes it easier than ever to lose sight of the economic boom now underway. For instance, despite the bellicose rhetoric and fears of a trade war, it's wise to remember that U.S. exports to China comprise just 1% of U.S. GDP. The U.S. economy overall is hardly dependent on trade with China. Real average hourly earnings are at a record high, and not just for this economic cycle. They tower over the high reached in the last economic expansion. Manufacturing purchasing managers reported slightly lower levels of business activity for March, but that's only slightly off from February's record high. Historically, this index has slumped to less than 50% as the economy slid into recession. Nothing like that is happening now. The non-manufacturing purchasing managers index, meanwhile, stayed right near its record high in March. And this is much more important since services account for 86% of U.S. economic activity. The leading economic indicators for February pointed to robust growth for 2018, and its six-month growth rate has not been this high since the first quarter of 2011. It's anecdotal, but signs of a tightening labor force are showing in the headlines of the local press in pockets around the country. Truckers, construction workers, and other skilled workers are in short supply in a number of spots. And although the labor force participation rate for African Americans has always lagged the overall U.S. labor force participation rate, that gap has closed. This is a rare snapshot of the progress of civilization unfolding in plain sight. The new tax law is causing a surge in earnings, which is what drives stock prices. Earnings on large U.S. companies are expected to soar 20% in 2018, compared with the historical annual norm of 7.4%. The Standard & Poor's 500 is reasonably priced and not far off from its all-time high. Amid the frightening headlines and increased stock market volatility, very strong economic fundamentals remain in place.
Thank you for listening. Please contact us with any questions, and also contact us if you're interested in our complimentary second opinion on your investments or to set up a meeting regarding your wealth. Don't hesitate to share this video with people who might benefit from our work. Thank you again, and have a great day.